Welcome investors to the Rebel Dividends March 22nd update. Today our share price is trading at 55 cents with 3.5 million shares outstanding and a portfolio value just slightly over 1.9 million. Dividend update. Today we paid out just shy of a 1% dividend, which came out to 0.0053617 cents per share. After paying out the dividend, our share price rose 14.5% week over week. This distribution was a total of $35,000. 22% went to the tax man, 70% to shareholders, and 30% to the management team. Now, once we are able to get approval from Puerto Rico, which could be within the next 4 weeks, we'll have the application in. That relative dividend could increase by about 75% for the shareholder base. And then the ratio would be about 35% increase for the management team. So we all really look forward to getting to Puerto Rico. Dividend history is up to 8.129%, and today was just shy of 1%. I'm actually anticipating next week will be a bit higher than this week's as the portfolio is going in the right direction. Portfolio update. Current portfolio is leveraged 151% with a total crypto position of $2.45 million. We have a yield farm position of 473,000, a cash position of 497,000, and an outstanding loan of 1.3 million. We continue to convert USD dollars into Ethereum and Matic. This week we've been exclusively converting into Polygon, ticker Matic, and we transfer these funds as fast as we're allowed to over to Aave, which increases our loan health collateral and allows us to borrow more money to increase the yield farm. So we've been buying the Polygon for the last 2 weeks, but Gemini and Coinbase do put a hold on transferring those funds by anywhere from 7 to 14 days. So it's just random what they decide. Tomorrow we do anticipate being able to probably increase the yield farm size 50%. So it'll be a huge increase in the yield farm, which will help us deliver bigger and bigger dividends. Here's a breakdown of the optimized portfolio today. We now have 580.56 Ethereum tokens worth $1.47 million, representing 51% of the portfolio. This is stored in a Nano Ledger S device, and it's parked as collateral at Aave. For the most part, we still have some funds that are stuck at Coinbase and Gemini, and we're transferring those over as the funds become available. We've been building into our Polygon position, which so far has not outperformed Ethereum. Ethereum's just been kicking ass this last week, but I do anticipate Polygon dramatically outperforming Ethereum, potentially by 2 to 3 times over this bull cycle we're anticipating could last potentially 2 years. This is valued at $552,000 and represents 20% of the portfolio. So just shy of half of our long position is in Polygon relative to Ethereum, at least over at Aave. The cash position's $497,000. Some of that's been frozen at Discover Bank, which is supposed to release those funds in 60 to 90 days. The rest is either in Bank of America, Citibank, or Wells Fargo or Wise. So those are our 4 banks currently. The yield farm position is $473,000. It's actually all in on Polygon this week. The strategy this week was to let the assets appreciate and let the value of Polygon catch up to Ethereum before we're more focused on the trading revenues, which are down 75% from a recent peak. We'll show you that data. Once we add the next $200,000 to the yield farm, which I'm anticipating will be the growth next week, that will go into Ethereum, and we will get this back into generating trading fees while still holding that large Polygon position. That's currently 14% of the portfolio. Our outstanding loan is at 1.3 million. This will grow by approximately $200,000 tomorrow. And again, that will be added to the yield farm position. So as our collateral, in Polygon and Ethereum grows, this allows our loan health to grow, and this ends up with a larger yield farm. So it's really important to get that share price up because it means we can borrow more money and build a larger yield farm. Our yield farm did gain a profit week over week of $46,796, and we only distributed $35,000. I was yelled at by Carl, "Why are you holding back on the dividends?" So very funny. I love the positive constructive criticism from Carl. So we will go ahead and not hold back next week, deliver the full yield, and I do hope it'll be substantially larger than this week's. We're currently in the most aggressive yield farm position, which is trading Polygon against Ethereum. And this benefits both from trading fees and from the potential appreciation in share value. So there's two ways the yield farm grows. This week, it was from Polygon going up in value. Macro update, we are entering a US tightening cycle of raising rates as China enters a credit easing cycle. Last time this occurred was from 2016 to 2018, and Bitcoin returned 4,400%. There's a slight difference this time around, maybe, which we will detail when we look at the data. So 2016 to 2018, we were with Janet Yellen slowly raising rates until things started to snap. And this did switch over to Powell. Actually, this was Powell, and this was handed over from Janet Yellen. Now, the key thing to note is that the balance sheet began to reduce in 2018 after having 2 years of rate hikes. They're discussing starting to raise rates and do the balance sheet reduction at the same time as early as May. So we'll be careful and cautious. But in general, I don't think it's necessarily the balance sheet rolling off that's a problem. I believe the problem for markets will be when the inflation rate gets in line with interest rates. So we remain bullish on cryptocurrencies while the bond market interest rates remain below inflation. Currently, a 30-year bond pays 2.586%. Now, a 20-year is paying more than that, while the inflation rate's at 7.9%. The CPI is expected to rise even further in March and remain elevated into summer as energy and food costs rise in costs rapidly due to supply chain disruptions in Russia, Ukraine, and China. On the China front, they don't seem to be willing to allow COVID to spread, so they remain very strict with lockdowns from that respect. The food crisis will not be resolved this year, even if the war ends tomorrow. They've really missed the opportunity to grow key food agricultural products such as wheat in Ukraine. We're also probably going to see long-term sanctions on Russia. Even if the war ended tomorrow, I'm really not seeing the sanctions ending anytime soon. So I do think we're going to have elevated inflation potentially for the entire year. Which means the bond market's going to be very ugly and continue to force investors into the asset classes we're invested in. Furthermore, if the bond market does get into too much trouble, we could very likely see some dovish surprises from the Fed, which I do believe would be risk on for cryptocurrencies. So in general, very, very, very bullish over the next 12 to 24 months for risk assets. There could be problems in the bond market that creates volatility, but the response would most likely be the US having to go back into a period of quantitative easing, which would really accelerate the upside for our portfolio. Reminder, you have 2 links to view the entire portfolio outside of the cash positions, and also there's a period of time where we're getting it out of Coinbase and Gemini into Aave, but those links are at the bottom of your email. We'll look at those in a minute. Do you want to invest more money with Rebel Dividends? Call Dean at 505-322-7515. Also, if you'd like to reach out to me directly, please shoot an email to support@rebeldividends.com. Disclaimer, investments are risky and there's a potential for complete loss of capital. Discuss risks with your financial advisor. Okay, I'm going to jump into some data and charts. First of all, here's the yield farm analysis. So at the peak, we were seeing a rating of 200, and now it's down to 50. So that's a dramatic reduction in the potential profitability from trading revenues. The good news is when the liquidity is low, tends to lead to the big jumps in price appreciation. And that's because people like to buy high and they hate to buy low. That's just the nature. So the smart money is buying and holding the sell-offs. And as the market rises, trading volume accelerates. Dumb money comes buying in at the top, chasing the momentum as smart money starts to dump. And so basically our strategy should become more defensive as we break into new highs and focus on yield farming with downside protection. When we're at low valuations with low trading volume, we want to be long the best assets and sit back and make sure we catch all the appreciation. So that's in general my strategy over the next stretch here. First tab we're looking at is the yield farm. And so you can see the total value is at $472,992. I intend to add $200,000 to that tomorrow by increasing the Aave loan, and that will go into Ethereum and get this back to generating some trading revenues. But again, those are 75% below. So we're more interested in the yield farm going up in valuation by share price, more so than the trading revenues. Over on the Aave loan, we have a health rating of 1.31. We have a substantial amount of crypto to transfer from Coinbase and Gemini tomorrow. That should get this up towards probably 1.35 to 1.4. And I'll most likely drop this down to 1.15 health rating in order to increase our loan by $200,000 and move it over to the yield farm. Okay, on the data, the bond market's just collapsing, and it's due to Mr. Powell coming out yesterday. So here's what they seem to do. They talk a lot of hype about very hawkish policy and then deliver less. And the market's been loving it on stocks and cryptocurrencies. The bond market, on the other hand, has not been liking that because then shortly after they go back with all this hawkish talk. So this week, Powell said they would most likely do a 50 basis point rate hike in the next 2 meetings. And this was immediately priced into the bond market. They're also talking about doing balance sheet runoff at a rate of $1 trillion a year. So if the US government wants to issue 1 to potentially $1.5 trillion in deficit spending per year, as the Federal Reserve wants to run off its balance sheet at a rate of $1 trillion a year, the market's going to have to consume between $2 to $2.5 trillion of debt per year. So this is in general going to make interest rates rise and make the bond market an ugly investment. The catch is this works until interest rates get too attractive, and again, relative to inflation, and then it becomes like a black hole sucking up money. So we're carefully observing this. In general, the longer the inflation stays sticky and elevated, the longer the bond market will remain unattractive and force investors into the assets we're holding. Here's a look at that yield curve. So everybody's talking about recession risks. In general, the yield curve inverting is very bullish for the assets we're holding, and it's not until the yield curve steepens. So once the 2-year starts coming down and the long end starts rising and that spread gets wide, that's typically where the market cracks. Okay, so we're nowhere near that very, very bullish outlook for these assets for the near term. Here's a look at the yield curve on another method. And boy, oh boy, the 20-year is way above the 30-year today. And so they've got a really ugly shape here. But just to look at this, typically what leads to recession and a stock market crash, and I would expect Bitcoin to crash before the stock market as a leading indicator, the 2-year will likely come down as the 30-year rises. And once that gets too steep, that tends to be what snaps the market. So we're nowhere near that point. Typically, it's 12 to 16 months out after the yield curve inverts. Here's the cryptos we're playing. This chart's really to give you a feel for just how much outperformance Polygon could potentially have. In the peak return from May of 2021, Ethereum was up 100%, but Polygon reached a 650% return. Okay, so it outperformed it by a magnitude of 5. So I really want to position our portfolio to not be looking at pennies on trading fees when we can be making massive gains holding Polygon. So our strategy will get more and more aggressive in appreciation under Polygon as we get more confident that the bottom is in and that we're about to have a potential melt up in assets. Another measurement for liquidity is the reverse repo. This is another bullish signal for us staying elevated at 1.7 trillion. Another indicator we're going to use to potentially call a good time to get defensive, cash out, take profits, and be safe will be when DXY falls to the 90 range. Now, it very likely could go to the 70 range if the US bond market does get into serious trouble due to sticky inflation and forcing the Fed into QE5 and having to buy up all its debt. Okay, so that is a very real problem the US is facing. And whether it happens this cycle or next, it's really just an unsustainable debt path. One of my highest convictions is that over this decade, the dollar will weaken, and this will be extremely bullish for cryptocurrencies. So far, we're doing really well, and DXY is elevated at 98.4. So just wait to see the price of Ethereum and Polygon if the DXY falls to 90. Also, we're now watching the Chinese currency and a potential devaluation. They need to essentially hit a 5.5% GDP target during a global slowdown. So they're going to have to really increase credit. And we are seeing them dramatically increase credit, bail out their stock market. And again, this should also be very bullish for financial assets. And that tends to be the central bankers' plans. When the US tightens, China loosens. This keeps the system working here. Just look at these bond markets collapsing due to the inflation. Let's go ahead and just look at the one that really is important for our portfolio is the TLT. I believe the markets won't snap until we get to around 120 to 112. If we see the TLT just continue to crash to the 120 level, that does concern me, and I'd most likely start buying put options on Ethereum and go to a more cash position. I believe this has been pricing in these rate hikes and will soon bounce. So I do think the TLT's sell-off is way overdone, that we should see yields fall, and that this will be extremely bullish for the portfolio. Here's the core inflation rate. Now, the CPI, including food and energy, hit 7.9%. Now, the central banks tend to think that food and energy costs fluctuate a lot. So this core inflation rate excludes that. The problem is the fluctuation aspect of food and energy is almost certainly to remain sticky for a very long time. So while we have a lot of pieces of the CPI falling, those most likely won't fall very soon. So in general, I'm expecting the peak inflation to hit in March. So we'll get that reading next month, and that it's not going to necessarily rise from there, but stay elevated in the 5 to 6% range for months. And again, this will continue to make bonds an ugly investment and force investors into alternative options. Producer price index has been trading flat for 4 months. So that's good. That's what we're anticipating. Here's the Fed's balance sheet currently. Here's what I want you to look at. So from 2016 to 2018, they only did rate hikes. From 2018 to 2019, August, they decided to start doing a balance sheet reduction. And this is where we hit the Bitcoin crash. So we'll see what exactly they end up doing in May. And again, they tend to talk a big talk and then deliver a lot less. And that's been, I believe, their strategy for a so-called soft landing. And then the ECB does seem to be stuck. Europe now needs to finance military and potentially rebuild Ukraine and replace a lot of supply chains. Plus, they're now trying to reroute all their energy purchases out of Russia. So all of this is going to cost a lot of money. I'm not anticipating Europe being able to tighten policy as much as the US. So it should be Europe and Asia being relatively expanding credit. Again, good for cryptocurrencies. See if we have anything useful on the news feed. This is one of the biggest sell-offs in the US bond market in history in terms of duration and decline. ECB's balance sheet continues to grow. Savan Henrik says the Fed will pause all rate hikes before the midterms. The banks are forecasting 50 basis point hikes May and June. Well, Powell did tell us that, so not a hard prediction. VJ says using a wire to transfer to buy Bitcoin has double benefit of both exiting the fiat system plus educating you on why the fiat system is unjust and broken. You literally need the bank's permission to transfer the fruits of your labor. And boy, oh boy, have I learned that operating rebel dividends. The amount of hell we go through trying to move money around is just mind-boggling. David Hunter has been mocked online because he's been so bullish during this pullback, but perhaps now he'll nail it. He says it's clear we're not going to see 1.5% before 2.5%. He's talking about interest rates. Traded down to 1.67. We're now headed for 2.5. This means the tightening cycle is ending. 10-year then heads to 1% and ultimately 0% in the bust. Reversal and tightening will be very bullish for stocks, bonds, and metals. That's actually what I'm anticipating. Here's a look at the Federal Reserve breaking markets after every single rate hike cycle. And you can see it typically takes a couple years of rate hike cycles. In general, my fear is when the interest rate starts to align with the inflation rate that we need to get really careful. That or the interest rates just get too heavy for the financial system to incur. So we're close to it on the TLT. You show me a 120 TLT, I'll most likely sell our assets and start shorting cryptocurrencies, but I highly doubt we're going to have that right now. Here's the channel for yields. It's now gone over it. Most likely it's going to fall from here. And that will be bullish for us in the short term. Okay, and the last thing I wanted to show you was a list of high profile hedge funds investing in crypto. Okay, here you go. Hedge funds investing in crypto, publicly known. Bridgewater, that's Ray Dalio, is outsourcing this to another hedge fund, $150 billion. Millennium, $50 billion. Matrix, $10 billion. Point72, $20 billion. Tiger, $90 billion. Code 2, I've never heard of that one, $50 billion. Third Point, $17 billion. Golden Tree, $45 billion. Brevin Howard, $20 billion. Tudor Investments, $40 billion. Plus many others I can't say. So the writing's on the wall. Everybody's going in on crypto. This has a beautiful long-term trajectory for us. Key concern would be bond interest rates getting too high right now due to the central banks tightening too fast. In general, I don't think Powell wants to create a financial crisis leading into the midterms. So I think he'll continue to talk a big talk and then deliver less hawkish tone. Meanwhile, it looks like Ukraine is getting ready to surrender, which again should help with the inflationary pressures slow down and cool off this bond market that is tanking currently. Okay, very good. So I'll go ahead and take questions now and throw up Dean's slide while we do so. Okay, well, no questions. Come on, guys. What questions we got today? I'll do another live crowd. Live, we have Bedros, Brad, Gary, Ian, Jam, Jeff, Jenny, Orlando, Mike, Rick, Rock, Ron, Tom, Steven, User, Victor, and Virgil. So yeah, it's been painful seeing our share price go down. I should have done a better job hedging that and predicting the bond market meltdown. But I do believe the bond market meltdown is essentially overdone, that yields will fall, and this is going to be extremely bullish for our positioning over this 2-year cycle I'm expecting. So with that said, let's see if we have any other questions out there. And I've unmuted Orlando and Tom Sharp.
How you doing, Jason?
Doing great. How are you doing, Orlando?
Starting to do a little bit better. The nosebleed is stopping. It's great.
Yes, sir.
It's been a little bit rough, hasn't it?
Yes, it has been a pretty big pullback. That's correct.
Yeah, no kidding, man. But hey, we've got the Mandalorian in charge, so that is the way, right? You're gonna pull us out of all of this. You got the force with you. I know that.
Yeah, this is a pretty typical drawdown in crypto, so I'm not concerned.
Well,
I've got a comment.
Like to,
Can you hear me?
Yes, sir.
Okay. Isn't this whole thing, this drawdown, really kind of just an academic issue? Because at the rate you're paying this thing, I'm going to make, if you keep it up at this rate, no matter what the price of the shares are, that's going to be a 29% return on my investment.
Per year. Yeah, the dividend alone is extremely exciting.
You know, short term, what difference does this make? You know, we know that cryptos go up and down, but they keep going higher highs and lower lows over a 2 or 3 or 4 year period. So I see this as just kind of an academic issue. So.
Well, you've been in crypto for a decade, Tom. So you've got a little more experience. You've been in crypto for a good decade, so you're used to the volatility.
Yeah, when it went from I don't know, $900 to what was it? It hit 20,000. Was it 19 or 20,000 in December of 18, and then it crashed again. That was disappointing, but I just held on tight. What is it? I've got diamond hands.
Yeah, laser eyes. So the blue laser eyes are for Bitcoin. The red laser eyes are for Ethereum. Okay, very good. Thank you, Tom. Appreciate it.
Great wisdom there, Tom. Definitely, 5-6 decades as an investor kind of shines through there.
Exactly. Okay, user says, how long do you think yield farming will go? Indefinitely. DeFi is growing rapidly. So the more the governments want to regulate the centralized exchange, more money is going to get the hell out and go to DeFi. So I just see a beautiful future for DeFi. It's growing exponentially and much faster than centralized exchanges. Rock says, what do you expect Ethereum and Bitcoin to do in the next 30 days? I don't expect 100,000 Bitcoin. Yeah, and I don't necessarily try to predict 30 days out, but yeah, I think we have a bullish period ahead of us over the next 2 years, and I'll be mitigating risks with what we just discussed.
And Jason, I know Rock was thinking about adding some more capital too, so that might be part of why he's asking that question. as well.
Yeah, I'm not going to make price predictions in the future. I think that we're going to see a very, very good appreciation of the share price uh, over the long term.
Yep. Nice. Yep. So really, Rock, look, in our view, it's probably not a bad time to add some shares if you're looking at doing so.
Yeah, beautiful time. I really think this is probably the best time.
Yeah, it's one of those situations, guys. You don't want to look back on this day, a year from today and go, good Lord, why didn't I put in more money, or, why did I invest, or whatever it is. So, yep. Excellent. Awesome, Rockin'. Yeah, call me, bud, or text me. If I know you're thinking about adding another 50 or maybe more. So feel free to call me or text me, bud. Cool.
Yeah, very good. Yeah, great week for the portfolio. And yeah, everything looks really good, especially once we get the next 200,000 added to the old farm. Very excited about the dividend coming out next week.
Yeah, Jason, and one of the things I was going to add too is it's just so neat to see that share price appreciation. Ethereum was up about 12% week over week, and then Polygon is up about 8%. So seeing our share price increase, 14% and change was really, really nice. I was looking at that this morning and doing some calculations and said, wow, this is so much better than just outright owning Ethereum or Polygon. It's not even funny, right?
Yeah, absolutely. Okay, beautiful, guys. Well, I've got a lot of work to do. We're trying to expand our capacity to get money out of the banking system under the radar. So we've got a very intricate system developed here to make this work. And I'm trying to improve it so we can process a lot more per day and keep this running smoothly. So thank you guys all for joining us live. We will do the webinars Tuesday now, so you get the whole package in one day. That lets me have an entire Thursday for developing the back end to be more efficient. And we've got a lot of good developments on that end. All right, Dean, Ryan, team, thank you guys so much. And we'll see you back on Tuesday of next week.
Thank you all. Great job, Jason.
Thank you, guys.